Well, folks, Palantir stock and the entire stock market is getting destroyed right now. We have a lot to cover in this video. We'll break down the charts here on Palantir stock, what I'm looking to do, am I buying more, selling. We'll talk about the overall stock market, which at this point, if you guys saw my last video, you know it's a bad day, right? So we have a lot to cover. Hit the like button. Feel free to subscribe and get your 30 stocks from Moo. You might as well in the midst of a red day like today. Check out the link down below. Deposit at least $100. You get 5 free stocks. Deposit at least $2,000. You get 25 more stocks, and your uninvested cash now will earn up to 8.1% APY. Guys, get on it. Use that link down below or go to stocksurfest.com/moo. And with that being said, cheers. Let's dive into it. So it's about 2:30 p.m. right now, East Coast time, and well, we're down over 10.5% on Palantir as all the indexes are getting squashed. We're talking the S&P's down 2.8%, Nasdaq's down 3.9%. Earlier it was down over 4%. Yes, 4%. We have, excuse me guys, the Dow's down over 2% and the Russell is down almost 3%, and the volatility index, the VIX, is up almost 20%. Guys, the VIX, let me pull this up and show you, is pushing 30 points right now, and it's at the highest level in months, right? Yeah, man, we are pushing now past where we were in December. Excuse me, guys, on the VIX, we hit in the middle of December about 27-ish points. We're starting to push through there, guys, and at that point, if we fully get out of there, which it looks like the VIX wants to, we will be at almost a 8-month high, 8-month high on the VIX. Yeah, we're getting to that territory right now with everything going on with Trump, tariffs, the trade war, the uncertainties through the freaking roof right now. And again, Palantir is getting a freaking beatdown. And we're in this range that we have discussed here in the past on the channel. We're in this window now of 70 to 80 bucks. We'll talk more about that in this video. And guys, we might be going lower. Let's get into it. So we're obviously taking out the lows from last week. PLTR is now at $76. Just about 10-15 minutes ago, we were at $74. So we are now down from $92 last week. That was the high, to $76. We are down 18% in just about 2-3 trading days, right? And if I pop up this 30-minute chart, clearly we were trying to consolidate at about 80 bucks, 78 bucks. We talked about it. We outlined how maybe we were putting in a triple bottom, but we didn't get the breakout yet. We saw the triple bottom, but not the pop to follow it. Now we're obviously dumping under $78, $80. The triple bottom breakout theory is pretty much out the window now. In fact, you guys can see this descending triangle is playing out, right? Supports at, again, it was at 78, 80 bucks. We were making these lower highs into that support, and then boom, we are getting squashed right under there now. And on the 1 hour time frame, we just hit a fresh low. Now officially from all-time highs, Palantir is down 40%. Yes, so it's safe to say now at $125, yeah, this stock was overvalued. And we all knew it. I mean, let's be honest. We all knew it got ahead of itself. That's why I trimmed profits at 123. Do you guys remember that? That's why I trimmed some of my position at that point, because it was just getting too ridiculous. And now here we are. This goes to show sometimes, or not sometimes, a lot of the time, what happens to high beta stocks in the midst of an overall stock market crash, correction, period of uncertainty, period of high volatility. This is what happens to high beta stocks. They get demolished. Like this. Not to say Palantir won't bounce back in the long term. I think it will, obviously. I still own a bulk of my position. But man, we just got way ahead of ourselves. And I mean, look, we only erased what? 2 months of gains, if that, not even a month and a half of gains. It's not like we gave back years of gains on the stock or a year of gains. It's at the same price it was at in the end of January. It's like, all right, no big deal. I mean, and it makes sense. I think the bubble really started post earnings. Do you guys remember we were at 75, 80 bucks? Then earnings came out about a month ago, early February, and this thing went up like 60% for really no reason. I mean, sure, earnings were solid, whatever, but it didn't warrant a 60% move, guys. That was just a blow off top rally, kind of just an unwarranted move in my opinion. And here we are. We gave back all the gains, right? And at this point in time, guys, we kind of have a head and shoulders here. Do you guys see it? Left shoulder, head, right shoulder. We're starting to dump now. The right shoulder starting to play out. We might be going down to, let's say, $70. $70 is a big support level. If I zoom in here, we held 70 all throughout December heading into the new year. Then if 70 were to break, if we fill the gap down to 70, we break through 70, we then could be going down to the mid 60s if this thing gets really ugly. Who knows? Throughout March here, if the sell-off gets a lot worse, this could be going down to $63, $65. That was actually the low, it looks like here, from the 13th of January, so about 2 months ago. That's where we bottomed, and then we doubled up, literally, from 63 to 126 pretty much. We doubled up, and yeah, I mean, the reality is, guys, in a market like this where stocks are getting destroyed, the indexes, volatility's up, there's uncertainty, there's going to be a flight out of these high beta growth stocks and into, well, for one, cash, and for two, more defensive stocks, safer stocks, quote unquote. Energy stocks have not gone down. Have you noticed that? Energy stocks have been doing pretty well. These are the types of investments that are holding up in the midst of this craziness we're seeing. So if you only have in your portfolio stocks like Palantir, tech stocks only, you're probably feeling a lot of pain right now. And not to say, it's not going to bounce back. We'll bounce back. I truly believe that. But right now, these are good times to have some diversification, right? I own XLE, for example, which is an energy ETF. And yes, it is down a little bit, right, from where we were about a month and a half, 2 months ago, but we're not down much. We're down what, $5 a share? I mean, what is that, like 4%? 4%, and Palantir's down 40%. It's like it's not that bad. XLE's holding up. There's also a dividend. So that's why I like having some different types of stocks in my portfolio, not just Palantir or Nvidia or just tech stocks. Does that make any sense? But at this point, guys, the whole market's getting clapped. There's really nowhere to hide, other than cash if you really don't want to get hit at all. But then it comes down to timing. If you're out of the market completely, you're like, all right, you got to time the bottom. Where am I going to buy? That's a really nerve-wracking place to be, because trust me, a lot of you that are in cash trying to time the bottom, you're not going to time the bottom and you're going to miss the rally. That's just how it works. So for me, I like dollar cost averaging in general, right? Especially when stocks are getting destroyed. I like buying a couple of individual stocks I like at certain prices, right? I like dollar cost averaging in ETFs because when the market bounces back, I want to be still in the market. I want to be invested, right? And I recommend you guys having an emergency fund, having a bunch of cash outside of your brokerage account as a safety net, so you're not panicking in your stock market portfolio. You're not trying to sell out and time the bottom. This way you stay invested in stocks if you have that peace of mind emergency fund. This way you stay invested, so if crap gets worth, like I have a freaking lisp, guys. Here we go again. if stuff gets worse, if it gets worse, right? You have this cash to fall back on, your emergency fund for whatever it may be. You lose a job, whatever. I don't know if the economy gets bad. And then you keep your stocks invested because you're not going to be able to time the bottom. Most people aren't, and get in perfectly, right? It's just not the reality of the matter here. And there's a stat. I forget the exact stat. I'm sure a lot of you watching know this. It's like if you miss the 20 best green days of all time, if you were uninvested during those green days, your returns would be a lot lower. You guys have heard of this stat, right? So it's like if you miss out, if you're in cash and you miss out on this crazy recovery, you might not get back in. You'll be like, "Oh, I'm going to wait until it crashes again. Oh, I'm going to wait until it pulls back." And then it's just not going to pull back, right? The psychology behind this stuff is crazy, and that's pretty much how I'm looking at it now. And for Palantir, I'm not buying more yet, but if we do get under 70, now we're talking in the 60 to 65 range. That's where I'll buy. And let's say it doesn't get there and it bounces back, fine. I'll just hold on to the shares that I have right now at a $20 average cost. Yeah. So what do you guys think? Let me know your thoughts in the comments. Run the likes up. Do not forget to subscribe. We're on the road to 100K here, guys, on YouTube. And get your 30 stocks from Moomoo. Deposit at least $100. You get 5 stocks. Deposit at least $2,000. You get 25 more stocks, and your uninvested cash now will earn up to 8.1%. APY, guys, get on it. Use that link down below or go to stocksurfest.com/Moomoo. And with that being said, cheers. I'll catch you in the next video.